Hello friends, it's not a surprise for everyone, Canadian real estate market is on decline, and the question is how far it will go and what would be the price in 12-20 months so we can measure our entry exit point. In this video I want to walk you through my forecasting analysis where I used publicly available data. I got it from Canadian Real Estate Association. And without any further ado, let's jump into analysis and let's see step by step how we can predict prices in the next year or two. Again, that is Canadian Real Estate Association data that is publicly available. You can download it right here, housing market analysis. Today is June 30th, so I have data up till May 2024. And we will use about 10 years of data to predict next 12 months, which is more than enough. So we have to get high precision prediction score. Let's walk through the data and see what we have and what can we use for our analysis. First of all, it gives us sales activity. It's seasonally adjusted. I was trying to find the methodology how exactly they adjusted seasonally, because there's a couple different options. But we're not gonna focus on sales activity. It's not that relevant, even though obviously it may affect prices, but you can sell lots of houses for cheap, right? We will be focus on prices. So how many new listings? Obviously new listings affect demand supply ratio. They do affect prices, but to me that's not a very clear metric, because I have to use how market also consumes those listings, right? And for sake of our analysis, I believe months of inventory and sales to new listings ratio is more complete metric. And right away, let's just notice what we see right here, right? So such a low month to inventory ratio happens right here in 2021. We are not doing forecasting just yet, just walking you through the data and showing you something that we can notice right away. And it will help us to explain what we see in price changes. So I highlighted in red those periods when it was incredibly low. So for example, if we compare it with May 2024, it's 4.4 versus October 2021, it was 1.8 and 1.7. Incredibly low inventory that obviously has to push price up. And now the most interesting part, what happened with prices. And yeah, if we switch between inventory and sales prices, you can see September 2021 up till March 2022, and even May, June. Only in June 2022 we see a bit more inventory coming up, and it is actually reflected in our prices. So we can see this huge spike of prices happened between July 2020, so when we had COVID, and up till I think it's 2022. So anyways, we're just exploring what data we have, and we'll move into Tableau, where it would be much easier to analyze, and that's where we will conduct our forecasting. And these are the results of price spike in 2021, because what's happening right now, the market is getting corrected, and as you can see, We have minus 4% year-over-year change across Canada, across all property types, minus 1% in British Columbia, and even more in Ontario. And for sake of our analysis, I think the most important section is actually seasonally adjusted sales prices. As you can see, they are broken down by property type. We have 1-story, 2-story, townhouse, and apartments, and we have mix. So for sake of our exercise, I think I got 1-story, apartment, and mix. And for forecasting analysis itself, I used Tableau. In my opinion, that's one of the most powerful tools to conduct quick research slash data mining projects. So that's the same data I just showed you. Again, we can see two spikes, May 2017, which I dug deeper, and it's actually a very quite reasonable spike, even though you can see it was corrected right after the highest point. But initially the spike was due to new immigration and international investors, low inventory, low interest rates, and high immigration rates. But this one, even bigger, obviously it gets already corrected a little bit, but we have to expect it will get corrected even more. So right now, what we have to do, we have to use all this data, and we have to forecast what's going to happen in the next 12 months. So right here, you can see our prediction. We used the built-in model in Tableau, and from my past experience, it works very well, and we do have enough data since 2005 to get pretty accurate predictions. Right here in yellow, we have apartments, and you can see how more drastically apartments fall down. That's usually the case. That's more sensitive asset type. Then we have in green, that is townhouses. In orange, we have 1-story, and you can see it's more flat, so it's a bit less sensitive. And in the next section, we will jump into prices itself. And for blue one, we have mixed. So that's the forecast. You can, in analysis, it lives right here. And forecasting options, that's pretty much straightforward. And right here, I thought it would be really interesting to draw trend lines, and you can see how a few years before the trend was all upwards, and then how after this peak in 2021 and a couple years of data, it goes downwards. But the question again, how fast and how far it will go. So we have all this data right here, so in numbers, that's the same that was plotted in previous tabs. And for sake of simplicity, I copied all the data into Google Sheets, so it just looks cleaner and it's easier to look at. And based on our forecasting model, which takes into consideration the data since 2005 up till May 2024, we can forecast that for townhouses by November 2025, if we're comparing with April 2020 with April data this year, the prices will decline by 9% 2.48%. For one-story structures, it will decline almost 4.5%. Apartment shows the most declined, the highest decline, almost 13%, and mixed, it will be close to 10%. I wouldn't panic because that's a healthy correction in my opinion, and I put together right here all the possible reasons why we have such correction. Obviously, that's not a surprise for everyone. Interest rate went up from 2021. It was 2.15% variable average across the market, and right now average is 6.9 for variable interest rate. So overpriced market in 2021. I put it here. And then obviously COVID money definitely boosted the market. And right here I got all the numbers from government website, right, where they mention how much they injected in Canadian economy. And of course, if in total right here it's $316.8 billion were injected in economy, and I also took into consideration Canadian GDP, which was 2.1 something trillion dollars, which means almost 15% of Canadian GDP was suddenly injected in the economy, and obviously they printed the money. It spiked the inflation with the low interest rate and with low inventory, and with the crazy market in 2021 plus COVID, the prices went up. Right now, all the prices get corrected, and according to our forecast, minus 10%. To me, it seems healthy correction. And with these numbers in mind, let's get back into our visual representation of prices. In my opinion, it would be healthy to enter or exit the market somewhere in a price range before 2021. So let's imagine we never had this spike before, and we steadily grow from this dip in 2019 up to 2020, and let's say our prices would be around, let's say, November, December 2020, before all this craziness with COVID started. So that having said, if I'm planning my entry or exit point and I'm assessing some property, I won't be looking, for example, if we are talking about House Sigma, if you use House Sigma for your property analysis, for price analysis, I wouldn't look at the past 360 days or even past 2 years of data. I would look into December 2020. And it seems like it would be the safe bet for the future entry exit points. If you have any questions, please leave me in the comments below. And in the next videos, we will do more forecasting, and we'll play around with the publicly available data sets. Thank you. Bye.